I personally think that this is so central to his legacy. If he gets out of Iran now, I think it will just allow China to really dramatically increase its footprint in Iran. I'm going to have to assume that a lot of people around Trump are telling him, if you go down this path, you got to stay with it. You cannot go in and then decide after like 2 weeks to say, time out, that kind of thing. If you've done it already, if you've gone into Iran, you have to finish the job, because otherwise the outcome will be worse than not going in.
David Woo, CEO of David Woo Unbound, which is a global forum dedicated to the promotion of fact-based debates around markets, politics, and economics, and also co-author of the upcoming book, Merry-Go-Round Broke Down, which you co-authored with Margalit Shanar. It is so wonderful to welcome you back to the show as always, David. I know we were just together at the start of the year, but wow, I cannot think of a better guest to have at this moment. So I really appreciate you taking the time.
Thanks for having me. Love being on the show.
Of course. And we love having you, and we are thinking of you, David. All right, we got to start. Let's set the table right now, or just set the stage. Let's look at things from that big picture, more of that geopolitical view, if you will. Just kind of set the chess moves, if you will, or the chessboard even.
Sure. I think, obviously, living here in Israel in the middle of this, actually it might mean that I'm a bit biased, but I think nevertheless, I think, actually is a good place, because I'm actually quite far away from most of the action. So it's actually a very interesting, I think I think from Israel's standpoint, this is the most important war since the War of Independence, 1948, by the way, the war that we're talking about with Iran. And I tell you that in terms of for the region, this is definitely the most important war since the Iraq War. So this war will have consequences. We may not be able to see all the consequences right now, but I can tell you this will be a very consequential war. But let's just basically go back to this sort of drawing board a little bit and just think about the big picture in terms of the game theory setup, right? Because you've got three players here. And then, what makes this war different? Because it's actually very interesting to me, because I think, it's fascinating the stock market is up today. It's barely down. Considering the fact that this morning Nikkei would open down 7% and then rally back, it had a lot to do with the fact that the US stock market has proved to be very, very resilient to, basically the massive rally we've seen in oil price and the geopolitical risk premiums, so on and so forth. So the question is, why? And this is actually ties in with this whole thing, right? Because you correct me if I'm wrong, right? I think there are only two possible explanations why the US stock market has been so resilient. One is that they believe, either because they believe that Trump is going to taco very soon, chicken out, and basically declare victory and end the war, or the market is convinced that Trump is going to be able to win this war very quickly. Okay? So I think that from the point of view of the market right now, there are two hypotheses right now in the market. If you think about it, there's a whole range of possible outcome in this war, but there are two that the market is attaching the highest probability. One is that Trump is going to taco. The other one is the US is going to win this war very easily, so that it's going to be over very soon, right? And let me tell you why I think that these are actually the least likely scenarios. Okay. I think, first of all, we have to understand something about Trump, which is that I think that, I think the market is overestimating the odds that Trump is going to tackle, like he's done on so many different occasions. I don't blame the market, because Trump, he tackled so many times last year that, there's a Chinese saying, you get bitten by a snake once, you are afraid of ropes for the next 10 years. I've lost my share of money last year betting against Trump, and then he tackled. So from that point of view, I can understand a lot of people don't want to basically bet against, Trump's tackle on this thing. But let's think about this for a second. I would argue that after the Supreme Court ruled against Trump's tariff, Trump is effectively a lame duck president. Normally it takes, usually the second term president does not become officially the lame duck until after the midterm of the second term. But I would argue the Supreme Court has already basically made him a lame duck, at least as far as domestic policy is concerned. Because now even Trump knows there is no chance he's going to be able to make the case for $2,000 tariff rebate, which was the only way he could, possibly bribe middle-class Americans to come out and basically vote for him. So I think from that point of view, even Trump has to basically believe that, the chances of the Republicans being able to maintain the majority is basically very, very low right now. So it's interesting because in the past, if you look at the history of the United States the last 50 years, when the president becomes a lame duck, there is a very good chance that president, focus shifts away from politics to legacies. And especially legacies regarding foreign policies. And this was definitely the case for Richard Nixon after Watergate. This was definitely the case with Bill Clinton after Monica Lewinsky. And this was definitely the case with Barack Obama. Now, I would argue that this is why I think, now that Trump cannot get anything done in terms of the domestic policy, essentially the agenda, he's now forced to essentially gravitate towards foreign policy, maybe foreign policy only, and to focus on his legacy. And there is no country more important to Trump's foreign policy legacy than Iran. Okay. Like Trump has invested so much in Iran by, first of all, walking away from the Iran deal, in his first term, and then reimposing massive sanctions on Iran, and then hitting Iran basically last June. And, so from that point of view, I just don't think Trump is going to tackle that easily. This is not a situation. This is why I do believe that, that the market is overestimating the chance that Trump is going to tackle. At the same time, I think the market is also overestimating, the sort of the chance that we're going to see the U.S. simply just essentially, walking all over Iran and this war is going to be done because the Iranian regime is going to be crushed very soon. And the reason is because, first of all, it's actually very funny. Only today we got final confirmation that Iranian drones have destroyed at least 4, if not more, of the U.S. THAAD, essentially the system battery. These are basically air defense missile systems that are even more sophisticated. American systems are more sophisticated than the Patriot system because they are designed to intercept longer range missiles. And half of them in the Middle East, I'm talking about deployed U.S. base have been destroyed. What we've been able to see, what surprised me over the past week is the fact that Iran has been able to launch many, many, many drones, especially against UAE, more than 100 drones every single day. If you're able to launch 100 drones, that means that you have 100 drone operators, managing them and so on and so forth, which means that, your operational capability has not been that much damage, I would argue. Okay. And then in case a lot of your viewers don't know, in fact, 90% of the missiles launched by US, fighter jets against Iran continue to be fired from outside the airspace using relatively expensive cruise missiles, as opposed to flying essentially, inside Iran and dropping cheaper bombs on top of Iran. All this will suggest that a week into this, I think there's a lot of obviously self-congratulation about what the U.S. has achieved. I think what Israel has achieved is more. But the market seems to believe Trump's thing that, he's going to destroy Iran's regime very quickly. This whole thing is going to play out very quickly. Either he's going to tackle or that he's going to basically win. And I think the market, in my humble opinion, neither is the most likely scenario. The more likely scenario is that this is going to become a more protracted and messy conflict.
What would change your mind, though? What signal would tell you that the market's actually right, though?
I think there will be a couple of things. It will be, first of all, if I see all of a sudden, Iran firing a lot of missiles at Israel, that will change my mind. And I'll tell you why. Ironically, I don't want people to realize this, but Iran has fired more missiles and drones against UAE than it has against Israel. Okay. In fact, Iran's attack against Israel have been quite measured. And I'll tell you the reason. It's very simple. Because, killing Israelis is not necessarily going to help Iran win the war. They believe that the only way they can win the war is by essentially driving oil price to $100 a barrel and higher and keeping it there for 3 weeks. They believe if they can achieve that, Trump is going to tackle. And this is the reason why they are focusing their attack on the Gulf countries as opposed to on Israel. But if, however, all of a sudden you see like they're starting to launch massive strikes against Israel, killing civilians, that would suggest to me that Iran believes that, they're becoming desperate. In other words, that they can see the end coming, and then they're going to release everything they got against Israel to kill as many Israelis possible in a sort of suicide kind of thing. I think, so if I start to see desperation as opposed to measured response on the part of Iran, I would think that will be a sign that the war is coming to an end, for example.
Let's talk about oil. It was above $100 a barrel. It's now off like those highs. I'm looking right now because even if I say the price, by the time this airs tomorrow morning, it would be a very different price, but we're at $95.36 a barrel. So what are the consequences? I guess, what are the consequences of like, okay, $100 oil, you mentioned $200 oil, and what are the options? Like, what are the scenarios or like the real risk if you get into those ranges?
Right. So let's think about at $95, what is the market pricing in terms of the loss of, let's just say, oil production from the global market, right? This is the most important question. What has the market priced in at $95? Okay. I'll tell you, this is the way you should think about it. So the world production or total, oil production in the world is roughly around 100 million barrels per day. Okay. And as you all know by now, like 20% basically flows through, the Persian Gulf. So which is about 20 million barrels per day. The typical sort of rule of thumb measure for Wall Street's, energy, oil analysts is this. Like, if you lose suddenly, 1 million barrels per day in terms of production, that usually is associated with, let's say, a 10 to 15% increase in oil price. Okay. So right now we've gone from, let's say, $60 to $90. So that's a 50% increase in oil price from the low. I would argue the market is priced in, let's just say, loss of 3 million barrels of production per day. Okay. What's 3 million? 3 million, Iran was producing, at least until recently, 2.5 million barrels per day. So what the market is pricing right now is no more than the loss of Iran's own oil export. And with very little discounted in terms of, the export from other countries who's basically, saying whose oil sales into the rest of the market will be deeply affected by the closure of Strait of Hormuz. What I'm saying to you is that right now, even though 95% of the tanker traffic has disappeared going through the Strait of Hormuz, the market right now is only pricing that this is going to last for no more than 3 or 4 days. That's what I'm telling you. So from that point of view, this is why, Iran doesn't need to, you don't even need any more. All you need is for this thing to drag out for a week or two and so on and so forth. Oil price could definitely go much higher because, think about this. Let's take an example of Japan. Like 75% of Japan's oil imports come through the Persian Gulf. So a lot of countries are going to be without this. Just think about Germany for that matter. Last week, natural gas price in Europe went up by 50% because Qatar is a major exporter of natural gas to Europe. Like you just cannot, the whole German manufacturing, it's going to be dysfunctional with that kind of basic price. So I would argue, but that's not the point. The point here is there's no doubt if oil price were to stay up here, forget about even going to 200, even let's just say $100 a barrel, this will be a huge shock to the global economy. But that is not what the market is pricing right now. Right now, the market is pricing the oil shock as an inflation shock as opposed to a growth shock. This is the reason why bond yields have gone up, but stock market's been holding up. Okay, down a little bit and so on and so forth. The market is thinking, listen, high oil price means higher inflation, which means the Fed is going to be on hold for longer, but the economy can take it. This is why there's no need to sell stocks. That's what's going on. You see what I'm saying? So The market views this oil price shock strictly as an inflation shock and not as a growth shock. Because if we're viewing as a growth shock, the stock market is going to go down and arguably basically rates are going to go down as well. Mm-hmm. But the market right now, and this is what I'm saying to you, the market's definitely pricing a glass full as opposed to a glass empty scenario. In
Okay.
that sense, the geopolitical risk premium is too low.
But the bond market's saying something different. So do you think they're sniffing out something different then?
Well, the bond market is taking its cue from the stock market. It's saying, oh, well, the stock market's holding up. If the stock market can take in $100 barrel stock, basically oil in its stride, then the bond market believes that then there's no need for the Fed to start cutting rates. You see what I'm saying? Because everybody knows that higher oil price means probably higher inflation. So the bond market, that's what's actually happening.
Interesting. Yeah. Okay, but then let's stay on that point then. If let's say we stay around $100 barrel, can let's hear domestically in the US, can the Fed cut rates then? Because you get back to the inflation story then.
Yeah, but it's also true. But the Fed, remember, focuses on core inflation. If oil price goes up, what does high oil price mean? It means that people are going to have less to spend after they're paying for their gasoline and so forth, which means that actually spending on core goods and services will go down. Okay. And so from that point of view, you could argue that the oil price shock is typically a deflationary actually shock, especially if growth basically starts to slow down. But I think that's what it is. But so far, clearly the market is not pricing this way because everybody's thinking, oh, well, the stock market. You have to realize, right? All these retail buy on dip investors will continue to basically buy on every dip. And also real money investors who think, oh, wow, listen, stock market's going up. Last year, they underperformed their benchmark because they didn't own enough stocks. And they were selling stocks after Liberation Day, whereas retail guys were buying in. Institutional guys are very hesitant to move into cash because unless they see retail investors having thrown the towel. And so far, we haven't seen retail throwing the towel. So everybody the retail guys, obviously, they don't care. They don't care oil is 150, whatever it is. They just think that whenever stock goes down, you're supposed to buy. And that's what's going on. So everybody's now following all the smart money. Institutional money is now following retail buy on dip investors because everybody thinks that these guys have basically stolen their shirts over the past couple of years. Not going to make that happen again. This is why, in a way, I think it's a very tricky situation because every American. I did an interview on the NPR radio this morning in Boston, and we were talking about my book, and then the person who interviewed me was saying like last week at the start of a week, she was paying whatever $3.50 to fill up her tank. Okay, $2.50. And by the end of the week, it was $3.50. I said, well, you wait. We're going to see $4 very soon. So the question really is, because for one thing, the jump in oil price, because a lot of people were bullish the U.S. economy, at least through the first quarter, because as you know, the whole thing about the tax rebate, was going to add up to about $100 billion more than last year. And then people thought, wow, all the middle-class American, blue-collar Americans are going to go out there and spend this money right away, that we're going to get a boost. There is no doubt that this oil price shock has pretty much wiped out. If the oil price stays up here for more than a month, it's pretty much wiped out, that fiscal stimulus check.
Hey everyone, I hope you are enjoying this interview. If you can, take a quick moment and hit that subscribe button. We're on a mission to hit our next goal of 100,000 subscribers, and your support could really help us get there. Thank you so much, and enjoy the rest of the interview. Well, then what does that mean for not just like the economy here in the US, but maybe more globally? And what are the economic implications? Are we headed for a recession then?
I think, again, it depends how long this lasts. I still think that I'm not so pessimistic to say, well, it's going to last 3 months. I'm hoping it's going to last. I think it's going to last long enough for the market to go down. Okay. And then that market going down will force Trump to basically tackle. That's the way I'm thinking about this, right? Because at the end of the day, if you remember last year, the Liberation Day tackle, the post-liberation tackle, stocks went down maybe 20%. Okay. Now, so I'm thinking but I do think that there's no doubt some countries are more vulnerable to higher energy prices than others, right? We said Europe, right? Europe, has given up on Russian gas. So they became very dependent on Qatari gas. And now they can't get to Qatari gas. And this is a huge problem for basically Europe right now. For Japan and for South Korea, okay, they import a lot of, essentially Iraqi and Iranian oil. Okay, not Iranian oil, but Saudi oil and UAE oil. All that is driving up. India, on the other hand, also imports a lot of oil, but India has the advantage. Now they get to basically buy Russian oil again because Trump is essentially making that possible. So I think it really, Canada right now is doing very well. Because Canada, you could argue that, you don't have to worry about geopolitics. So the Canadian supply is pretty stable. I would say that in general, Canada and Argentina and Ghana are probably going to do well out of this. OPEC is going to basically lose out. Russia's going to do well. The U.S., relatively speaking, is going to do better than others because U.S. is now more or less energy independent. But however, the U.S. middle class, and because they spend so much more on energy than middle class elsewhere, they're probably going to be hit hard. Okay.
Yeah. I was going to ask you, like, who are the winners and losers? And I think you just outlined it there. The last time you and I spoke, beginning of the year, you were talking about the thing to watch and pay attention to, or just like the framework would be the midterms. We're coming up on the midterms in just a few months, gosh. And how that's going to kind of like drive a lot of, Trump's decision making. Sounds like, though, that he might be in a bit of a political predicament here. How do you see this one unfolding?
Yeah, I think the midterm is almost irrelevant now. I think, obviously at the start of the year, everybody was focused on the midterm because the expectation was that Trump was going to throw the kitchen sink at the economy ahead of the midterm to put his party in a competitive position ahead of the midterm. But now, if you think about this, it's actually interesting. In my humble opinion, like Trump is running up against real constraints with respect to both the Fed vis-a-vis monetary policy and vis-a-vis Congress vis-a-vis, fiscal policy, right? Because I think the reason why he went with Warsh is because he became convinced, where he's been persuaded, that if he went with Hassett, then it makes it more likely that Jerome Powell is going to end up staying after his chairmanship expires, which then will deprive Trump appointees from, securing a majority on the board. Okay. But ironically, I don't know if this changed today, but as of last week, Trump has not even officially sent his nomination of Warsh to Congress to get a confirmation. And I can only assume that he's still sleeping on this, simply because there's a very good chance you go with a Warsh, and then guess what? And Powell may end up staying anyway. So I think Trump understands now that his options vis-a-vis the Fed are extremely limited. Now, the Supreme Court, having ruled against his tariff, has now made it impossible for Trump to rally the support of Congress, the Republicans, to basically do this, $2,000 rebate check, the tariff rebate check. So I'm saying to you that, if Trump, there's no doubt for the Republicans to pull off a win in the midterm, there would have to be additional fiscal or monetary stimulus between now and the midterm. And I would argue the Supreme Court decision and the whole thing about the Fed makes it now very, very unlikely that we're going to get any new any stimulus, monetary or fiscal otherwise, until after the midterm, by which time, so I think that the midterm is no longer such a major consideration for Trump, because in fact, this is the reason why he's now turning to Iran after that, to Cuba, and for I know, to Greenland soon after that.
Mm-hmm. I take it didn't surprise you, though.
I think it didn't surprise. I have to say, though, I think with respect to the Fed, I thought that was, I did not surprise me. I have to say the Supreme Court decision, it did surprise me a little bit, because I was hoping that the Supreme Court will basically vote on a case-by-case basis. It would not have voted in such a blanket fashion against this entire, essentially him trying to impose tariffs based on the Emergency Act. I thought they would have been a bit more essentially granular, but forget it. It's over now. But I think, the point here is that, as you know, a lot of Republicans, who were against Trump's tariffs held their noses because they were afraid of him all throughout last year, because they knew how much power Trump had. He could, essentially, start supporting, primary challengers against incumbents as a way to, lean on them. And so everybody shut up. Nobody said a word in his own party against his tariff. But now it's a different story. It's a completely different story. I think more and more people are speaking out against the tariffs. And then in any event, I don't tell you, right now, I'm sure, if this is a Monday right now, I guarantee you half of, Congress is not even in Washington right now. They're all campaigning back home because you're going to have the primary elections coming up very soon. So like it will be very difficult for Trump to get anything done, including any legislation on Bitcoin. So don't think that's going to happen anytime soon to support Bitcoin either, because a lot of people were still holding out hope that something's going to happen with Bitcoin that's going to give Bitcoin a boost. I don't think that's happening either.
Okay, so what's your base case? Do you think he loses the House in the midterms? Does he lose the Senate? Like, what do you think? I mean, do you have a base case?
My base case is that he loses the House.
Okay.
They hang on to the Senate, but barely so. Okay. But the bottom line here, though, is that it doesn't matter. He just loses one or two. It will have the same effect in a sense that nothing is going to get done anymore. They won't even be able to do a reconciliation bill. If you remember, they were able to get his tariff through, even though they didn't have, his big, beautiful bill through last year, even though they didn't have supermajority, right, in the Senate, right? Because the Senate, if you have 60, if you haven't got 60 votes, you can't get anything done because the other side can use filibuster to essentially complicate the entire process. But they were able to use this reconciliation thing to basically get the big, beautiful bill passed. But once you lose the House, forget it, nothing's going to get done. In fact, the only thing that's going to get done now is that every day there will be depositions. There will be, they're going to try to impeach Trump. There's no doubt about that.
Yeah.
And Trump knows that. He knows that this is going to be, and this is also the reason why I think he's going after Iran now, as opposed to waiting out.
Then waiting. Okay. Explain that then. Yeah. Why now?
Because you do it now because once you become a lame duck, then literally everything you do, the media is going to attack you for it, right? Right now, it's a sort of like, oh, wow, so the New York Times doesn't like his move on Iran, but they're going to be a bit circumspect. As you know, Jeff Bezos just fired 30% of the staff at Washington Post because they're seen as being anti-Trump and they couldn't sell newspapers. My point here is that if the Republicans lose the midterm, the Democrats are going to go on the rampage in terms of, essentially try to impeach Trump. Not that they're going to succeed, but literally every day there will be hearings, deposition, the whole entire thing. And then, the media will feel much more emboldened to attack Trump, this and this and that, which then weaken his leverage vis-a-vis his party in terms of backing him on such a big thing, such as the Iran war. I mean, this is not something you can do. Like, even if you're president of the United States, you still need backing from your own party. You know what I'm saying? So I would say that, therefore, once you believe you are the lame duck, you start doing what Trump is doing now. And this is why I think Trump cares less about the market now than he did last year.
Interesting. Yeah, it's a different Trump. Like, the market's not the scorecard then.
Exactly. Because you need the market to basically to win the midterm. You're still trying to curry favor. If you believe that you can still win the midterm and you know that the stock market is a very big part of it, fund management, you're going to be focused on that. If you think it's a lost cause, then you're going to focus on the sort of longer term, legacy issues for your presidency. You want to be remembered for something else. Okay.
Well, yeah, to that point though, can't this be like legacy defining? Like, if he's successful too, couldn't this just define his legacy and he can make these kinds of moves?
But if he can bring about a regime change in Iran and a smooth transition to, democracy or whatever, he's going to go down history as like one of the great American presidents. I think in terms of foreign policy. And then people are going to be looking at Trump as someone who's daring, who used limited think strategically, that can actually affect, that makes the world a better place. Okay. There's no doubt, this is why there's so much writing on this, especially given, another angle people don't realize. This is also the reason why I don't think I think the markets are overestimating, Trump, the chances that Trump is going to tackle easily, is the fact that the Chinese have now literally crossed the Rubicon as far as Iran is concerned. Let me just put it this way. Recently, the China-Iran Railroad, which runs 10,000 kilometers long, that's been under construction for the last 10 years, has become almost fully operational. Once it becomes fully operational, Iran's oil export to China will no longer be essentially affected by the U.S. sanctions on Iranian oil export. In other words, the U.S. loses a powerful leverage over Iran once this railroad becomes fully operational. And meanwhile, we just heard, 2 weeks ago, there was a report that Iran just installed the most advanced Chinese, radars that are capable of detecting, stealth, aircraft like the B-2 bombers, or for that matter, the F-35s. So what I'm saying to you is that this is why the war in Iran has become a proxy war between the U.S. and China. And this is the reason why all of a sudden, even people like Vance, who's obviously very lukewarm about anything involving U.S. troops abroad, has rallied, to the war because they hate China, right? These people hate China. So as long now that they think a lot of basically these people around Trump who are making the case that we need to, bring about a regime change in Iran is because they believe that this is the only way to prevent Iran and China from strengthening their ties further in Iran that will give China a massive foothold in the region. And they will meanwhile allow Iran to become the next North Korea. In other words, untouchable.
Yes. Okay. Wow. David, this is why I love talking to you, because you help us see all of these various moving parts and what are the, like, if you're, I don't know, I guess the analogy would be like, you set like a chessboard and like where are the players set and what are the potential moves here? And there's a U.S. China story here. Then what do you think are the moves? Like, is there, because we know the Strait of Hormuz right now it's really, really important. It's important to China. I guess that railroad that's part of the Belt and Road Initiative, I take it. I don't know. I'm not familiar. Yes. Almost online, not online yet. Is there a scenario, and please forgive me, I'm not a geopolitics expert. Is there a scenario where the U.S. could control the Strait of Hormuz? Is that way far out there? I don't know.
This is probably the single most important question right now. Okay. I personally think it's going to be very difficult, and I'll explain to you what I mean by that. Mm-hmm. Okay. Now, if you look at the Strait of Hormuz, okay, you look at another strait, which has become a bottleneck for maritime traffic, is of course the strait controlled by the Houthis, at the mouth of the Red Sea, on the other side of the Middle East. Okay. Now, let me tell you this. I followed the Houthis very closely in the last 3 years, and this is an amazing story, by the way, which is the fact that the Houthis, okay, in this poorest country, Yemen is like literally the poorest country in the world, right? The Houthi rebels have been able to literally strangle, okay, the maritime traffic through, the Red Sea at will. Okay, whenever they feel like it, they can literally, essentially stop all traffic going through the Red Sea by using relatively unsophisticated weapons. I mean, they're using sea mines, they're using drones, they're using some, anti-ship missiles, and so on and so forth. Iran is looking at the same kind of distance, about 30 kilometers in terms of the width of this, the Strait of Hormuz at this narrowest point. And then if you look at the usable sea lanes, even basically more narrow. And that gives Iran huge advantage because they have a long, essentially, they don't need this. Trump is so proud of the fact that we've destroyed 50 of their naval vessels. That means nothing because that does not degrade the ability of Iran to control the Strait of Hormuz. They can use artillery. They can use drones. They can use frogmen. They can use mines. They can just literally save their missiles and fire a missile every, half an hour into the Strait of Hormuz, and then no tanker is going to run the risk of basically sailing through it. And then, in fact, Trump is talking about sending in, the aircraft carrier to help to essentially tankers to get out of there. There is no way, no Navy officers will recommend that because it's so narrow. Once you send your aircraft carrier into forget about the Persian Gulf, we're talking about the Strait of Hormuz, it becomes a sitting duck. Okay. The Iranians don't even have to aim that basically accurate to be able to hit it. So what I'm saying is that this is an important point, which is that there's no doubt US and Israel are military, technologically superior to Iran. But what Iran is now trying to do is they're trying to pick a battle whereby that it can blunt the technological advantage of the US and Israel. And basically picking the Strait of Hormuz is like a perfect spot. Okay, it's a perfect spot because it is where like high tech is not going to help you at all. Okay, where low tech is superior. And I'm just saying, the Houthis have demonstrated this the last 3 years. If you don't believe, just look at what they've done. Okay, and they have 1/10 of the resources that the Iranians have to do the same job. Okay, so right now I have to give the odds to Iran. I think when it comes to the Strait of Hormuz.
Interesting. Okay, but again, not a geopolitical expert here, but couldn't you like make enough surrounding countries like really angry with that too? Like, I don't know if there's anything there, but
right,
it's a critical conduit, not just, I mean, it's for probably, I would think, not just the end users of the energy, but the producers.
Right. I think it's a very good point. Now, UAE is a good example, right? So as you know, I mean, Iran has launched more attacks, missiles and drones against UAE than it's attacked Israel with, over the past week. It's pretty amazing, right?
Yeah.
Now, why is it? I mean, besides the fact that they're trying to destabilize the oil market, because if you fire missiles at Israel, like it's not going to destabilize the oil market, so that doesn't serve Iran's immediate purpose of driving up oil price, but UAE is a very different story. But there's a second reason why they're doing this, which is that they are trying to cause UAE and Saudi Arabia, these other Gulf countries, to run out of their interceptors. Okay, because every drone, every missile that, these Gulf countries tries to bring down, they have to use, interceptors. And I'm telling you, interceptors are already running, inventories of interceptors are already running very low even before the war started. And then there are many people who believe that by the end of this week, these countries are going to be pretty much defenseless because by which time they will have no interceptors left. Like the Patriot missiles, you understand, the US produces the Patriot missiles. How many does it produce a year? It produces 700. That is, 60 a month. And then, half of them has been going to, Ukraine, of course. So so with how are you going to be able to defend these countries? And this is why Iran, this is another reason why they're focusing their energy on hitting these countries as opposed to Israel.
Wow. Okay. Again, like you're helping us all like learn and understand this. Okay. So
I'm just saying that, listen, I mean, the Iranians, I mean, I think, obviously, it's, these people are extremists, they are religious fanatics, but we also have to appreciate the fact that Iran, is, this is not like Saudi Arabia. I mean, Saudi Arabia speaks Arabic. I mean, Saudi Arabia was founded by Muhammad, it's a relatively new country, even in the greater scheme of things. Iran has been around for, let's call it 3,500 years. They speak Farsi, they don't even speak Arabic, they speak Farsi. These people invented chess, by the way. These people are very educated until, the Iranian Revolution. They were the most educated, the richest, basically, country in the Middle East. So you're talking about dealing with a people who come from a great civilization, who are very clever, who are known to be very strategic in their thinking about things. I don't think we should count them out that quickly. That's what I'm saying. And they have a long time to prepare for this. And this is why I can only assume that the market doesn't really understand this angle. And I think all I know is that right now in the last week, it seems to me that their response in this war, even though it may feel like a one-sided war, it's like the whole world against Iran. I would say Iran's relative measured response would suggest that they are continuing to execute a plan, as opposed to just, essentially reacting as opposed to acting proactively.
So to summarize, like when you look at the market, it's been relatively resilient, the retail buyer, if you will. Institutions following what the retail folks are doing. But you're kind of saying that the market's kind of pricing in a taco. Trump always chickens out, that they think maybe it won't be as protracted. You'll chicken out. What do you think the markets should be doing? No, I don't know if you could do it. What do you think the markets should be doing then? Or where do you think they should be if that weren't the case? Much lower? How much lower?
I think, listen, I mean, at the end of the day, I think it's interesting. I would like to see the stock market lower, but that's because I'm short. I'm long oil. I've been long oil. That's doing extremely well. I've been long oil since 60s actually. No, it's over 100. And but I've been short stocks too, Nasdaq, and it just. I mean, QQQ is finally broken below 600. I mean, it closed below 600 on Friday for the first time in a while. So we'll see how that goes. But I think it just feels to me, again, as I said before earlier, like the market right now is pricing an inflation shock as opposed to a growth shock. And because the market believes that this war is going to be fairly short-lived, short-lived enough that the market is not to worry about a significant slowdown in growth as a result. And then the only reason why the market thinks that this is going to be a very short-lived war is because the market either thinks that Trump is going to topple or that the U.S. is going to declare victory very soon. That the regime in Iran is going to fall like whatever very, very quickly. And I'm just saying to you that these two assumptions, which is a geopolitical in nature, it's just not true. I think it will be difficult for Trump to tackle easily on this one. Okay. And then, and I don't see an easy way for Trump to be able to do a knockout, of Iran, essentially in the first 3 rounds.
Mm-hmm. Okay. So, at what point do you think the markets might realize that, hey, this is going to be much more protracted? Like, what is the kind of timeline?
I think this week is going to be very important because I think, the oil price is going to be a huge part of this because obviously the main channel, that's driving financial markets from this war is oil price. I mean, $100 a barrel is already very, very high. Should this thing keep going higher? Because for every day that the Strait of Hormuz remains closed, that means countries are having to dig deeper and deeper into their reserves to essentially, to keep their economy running. I think another week of this is it's going to be, we're going to be at that point that country's going to be running out of oil. And then that's when price is going to go up. And I think it's interesting because it's very different than, in February 2022, when Russia invaded Ukraine, when a lot of people got long oil very quickly. This time, if you look at CFTC data, the market recently started to buy some oil, but the long oil position is still very low, and that's the problem. The problem is that like the market is just completely unprepared. It's just essentially right now looking to Trump to tackle, and I just don't see how this is going to happen very soon. But you know what? I could be wrong. But I'm not saying that. Obviously, Trump is feeling the pressure. I'm sure a lot of people around him are saying that's it. But I personally think that this is so central to his legacy. If he gets out of Iran now, I think it will just allow China to really dramatically increase its footprint in Iran. And then we get to a point that Iran becomes off limit to the US. And then the whole dynamic in the region will turn against the US. And I think this is why there's so much writing on how this thing finishes. I'm going to have to assume that a lot of people around Trump are telling him, if you go down this path, you got to stay with it. You cannot go in and then decides after like 2 weeks to say, time out, that kind of thing. If you've done it already, if you've gone into Iran, you have to finish the job because otherwise the outcome will be worse than not going in.
Yeah. And maybe again, like the legacy is much more meaningful than where the stock market's trading ultimately. Maybe he has that realization now of like what's going to be more important. And if he's successful and he can pull off the regime change, like you said, he'll be remembered as like one of the greatest presidents of all time. Is that right? Would that be fair?
I have no doubt about that. I have no doubt about it.
So do you think that's the most likely outcome then?
I don't know. No, I don't think that's to be the most likely outcome, simply because I think it's be very difficult to do a regime change without putting troops on the ground. And right now, even Trump, regardless how much is at stake, I find it difficult to believe that he will commit U.S. forces, ground forces in Iran. Mm-hmm. And I think the most likely outcome, which is not a bad outcome for the U.S. standpoint, is simply Iran descends into civil war. where you have these, revolutionary guards, the senior officers return to their provinces and then become warlords. And then they seize critical assets and the countries become divided. And you could argue that, so one way for Trump to win this war is by devaluing Iran as an asset to China, right? Because if Iran has a civil war, anarchy, and then warlords, Trump, at the end of the day, let's not be too naive here. Trump doesn't care about the democracy of the people there. It's like, he went into Venezuela. He took he took Maduro out, not because he was trying to promote democracy. He was just trying to get his hands on Venezuelan oil. The same thing with Iran. They just want to reduce the strategic value of Iran to China.
That's
if that means that, a civil war, so be it.
Yeah. What do you think is the conversation inside the top of the CCP? Like, what do you think Xi Jinping's thinking about right now?
I think that Xi Jinping is thinking we're not going to send troops into Iran because he didn't want to have an open conflict with the U.S., even though this is arguably the first real proxy war being fought between the U.S. and China ever. Okay, by the way. And I think that, however, I suspect the Chinese also thinking that that Trump is weak. They can see that the Supreme Court decision ruling having weakened Trump. They think that, they don't believe that he has the stamina because everybody, the whole world saw that Trump taco again and again last year. So I think that, the Chinese probably behind the scene are sending money to Iran, helping them to strengthen their defense capabilities and all that stuff. Okay, keeping them well supplied when it comes to food and basic necessity to keep them going in the war, because they probably also thinking that Trump does not have the nerve. And that's another reason why I think, this is actually very important, because if the Chinese think that way, then the Iranians thinking that China's got their back, then they're going to be even less likely to taco on their part. So the question really is Iran going to blink first or Trump is going to taco first? Right now, I think the China angle makes it much more difficult for Iran to blink, because they know they have one fewer reason to blink, because they think they got China basically behind them. And then, because China is behind Iran, the stake is so much higher, makes it less likely Trump is going to taco. So I think China is actually very central to this entire equation.
Yeah, but then Trump's much less likely to taco than, gosh, wow. I feel like, David, we're probably going to be talking about this for a long time. I imagine we'll have you on for more episodes where this is still front and center of the conversation. What are the advantages for the U.S. and do you think this is worth the risk?
I think, listen, I think from the U.S. perspective, there's probably not that much choice. As I said before, because one is, the way things are unfolding in Iran in terms of the relationship between Iran and China, this could be the last window of opportunity for the U.S. to actually affect the regime change before, Iran becomes essentially, the regime becomes completely, buttressed with Chinese money, Chinese technology, and so on and so forth, becomes untouchable. So I think the U.S. doesn't have much of a choice. Okay. But I do think, on the other hand, and I think from Israel, there's not much of a choice. But this is how it is, right? Because in a way, the geopolitical, essentially, because this is about, in the end, we talked about this is about the unipolar world, in a U.S.-centric unipolar world trying to retain its hegemony, with China and Russia trying to promote a multipolar world order. I think in a way, it sort of makes sense that it's understandable the U.S. wants to keep things, as what it is. And for China, by the way, a lot of Americans don't realize the story. This is a very important background in terms of China's interest in Iran, which is that, a lot of Americans simply, you learn already in grade school, let alone high school, that, Japan invaded Pearl Harbor. The question is, why did Japan invade Pearl Harbor, the way they did? Well, what really happened, was the fact that a week before Japan invaded Pearl Harbor, President Roosevelt imposed a total oil embargo on Japan, because the U.S. is the most powerful navy in the world. U.S. can enforce basically, oil embargo on anybody. And then Japan therefore was staring down into the barrel, and they can see that if the U.S. succeeds in imposing this total oil embargo, it would just, Japan had weeks before its economy just completely collapsed, because you cannot have a modern economy without oil. The manufacturing, nothing. So Japan was literally in a total they were in a desperate situation. And then the government met essentially for 3 days and 3 nights to try to figure out what to do. They ended up essentially deciding on this very risky attack on Pearl Harbor in order to destroy the U.S. Pacific Fleet, so as to give Japan enough time to invade Malaysia and Indonesia in order to get their hands on oil there. Okay, so the entire Pearl Harbor attack, it was not, oh, well, Japan decided to invade the U.S. It was literally to weaken the U.S. ability to stop Japan from getting his hands on his own oil in Southeast Asia. Now, imagine now you've got the same situation with China, right? China remembers this lesson. I mean, this is what Japan did. U.S. did what it did to keep Japan in its place and drove Japan into a desperate gamble. Now, in China, why? The whole entire Belt and Road Initiative is about building a land route from China to the Middle East onto Africa. And the main reason is because China is very wary that one day China's going to wake up and the U.S. has imposed a total embargo on Chinese oil imports or Chinese basically iron ore imports and whatever, everything else. And this is the reason why China has been building this land route. I mean, this is the main reason. This is why Iran is so important. Because that's, so you got the railroad there, and from there on, it goes on to Africa and so on and so forth. But what I'm saying to you is that, this is what happens. It's about the struggle and the rivalry and the struggle, of the two big powers. And then, but the struggle itself, promotes conflict and then leads to war, right? That China's trying to do this in order to preempt the U.S. from imposing a choke point on China's, access to Africa and the Middle East. But U.S. sees China building a Belt and Road Initiative as threatening U.S. interests in the region. So then they start to basically compound each other, and that's what happens.
Interesting. Okay, is there a way? I don't know. I don't know if is there a way? Is there a risk? Or is there an opportunity for the U.S. to kind of cripple that Belt and Road Initiative? And I guess what would be the knock-on effects of that?
I think it will be difficult. I think right now, I mean, obviously, if they can affect the regime change in Iran and replace the regime in Iran with the pro-U.S. regime, then China, the 10 years of investment that China put into building this thing, a railroad to Iran would be worth nothing. That's it. That's what is coming down to. And I think, this is why China has no incentive for the U.S. to succeed in Iran. And that's where it comes in.
So fascinating. David, I feel like I always learn from you. Okay, so just to recap from the investor perspective, you're short the markets right now. Do you like gold or anything?
I think, I don't like the way gold's traded the last few days, but I like gold. I think what is very clear is this, right? I mean, if you think about what really happened in the last week, right? What really, since the war broke out, is that all we've seen so far until now is that all the crowded positions got stopped out, right? So the most popular trade year to date was emerging market equities. What was the worst performing asset last year? Last week was emerging market equity. Everybody and their grandmother was short the US dollar. What was the best performing currency last week? Was the US dollar. Everybody was long steepeners, okay? And guess what? The curve actually flattened last week. Everybody was trying to short Bitcoin. Guess what? Bitcoin was up 7% last week at a certain point. So what I'm saying to you is that so far, this war, I mean, it's only been 7 days. So, it's still very, very short war so far, which is in the beginning. So far, all we've seen is that people cutting back their positions, okay? So this crowded trades got taken out, okay? I don't think the market has started to really price the fundamental consideration of this war. Okay. And that's what it really comes down to. And so, for example, S&P did well last week because the Magnificent Seven did well. The Magnificent Seven did well because everybody was underweight the Magnificent Seven. I mean, year to date. I mean, Magnificent Seven have gone nowhere year to date, right? And all of a sudden people say, well, this is a shock, a liquidity. Everybody's trying to get back into liquidity. And guess what? Magnificent Seven did well. And as a result, S&P did well. And then the US did well as a result, and the dollar did well. So there's a lot of that stuff going on right now. It's about positioning. It's about liquidity. But if this thing were to drag on, until the end of this week, I think a lot of economists, strategists, Wall Street people are going to start talking about the sort of the longer term consideration. And that's when we might see, a more pronounced risk off than we've seen so far.
Mm-hmm. Yeah, risk off environment. And do you think we'll see a recession if that's the case?
I think a recession is still, I think with Trump at the helm, I'm not too worried about a recession.
Okay.
I think, I don't think he's going to go crazy. Okay. But even on this Iran thing. So I think, so from that point of view, I don't think it's going to become totally irrational. It becomes totally irrational if China, there are scenarios that we can tell. But right now, sure. Because, if you think about this another way, right, this is where psychology is also very important. You say, okay, fine. The big story of 2024-25 is this massive retail inflows into stocks, crypto, and everything. And that essentially should be viewed as a massive easing of financial conditions. Even, okay. But we now know that there's no doubt that private credit has an issue. The AI bubble is starting to, look long in the teeth. If all of a sudden this war, we see an oil price shooting up, there's not much you can do about it, and so on and so forth, and then, that's a tightening and then the Fed cannot cut rates because everybody's worried about inflation. That could compound the stress right now in private credit, the stress in, the AI bubble, and then it's a very different story. Okay, and this is also why. In a way, you could argue that without this war, this private credit thing is a bit of a concern, but it's not the end of the world. On its own, it's not going to push us into a recession. But if you have a whole bunch of things happening at the same time, that becomes a different story. If if China decides to essentially come in and more directly help Iran, we've got a problem here. Okay. Yeah. If they manage to, let's just say, hit a U.S. aircraft carrier and 20 Marines die as a result, then we've got a problem. So there are a bunch of different, this is why this war is important, because the system has some fundamental fragilities that on their own, they are okay. They can be coped with. But if this war goes in the direction that the market doesn't know how, because the market is used to Trump tacoing. If he doesn't taco, then the market will have to price back the risk premium. That's when things could happen.
A lot hangs in the balance. And would it be fair to say this is probably the most dangerous phase? Because I guess we'll get more clarity on is it short or is it going to be protracted?
Yeah, I think this is why this week is going to be very, very, very super important. It's going to be very, very super important because oil price right now is not a sustainable level. Either it's going to be heading down because that U.S. has defeated Iran and then the grip on the Strait of Hormuz has loosened, or that Iran is going to continue to basically hold the Strait of Hormuz and the oil price is going to become much higher. Mm-hmm. So either way, we're right now in no man's land in oil. It's either going to be much lower or much higher.
Yeah.
Okay? And if it goes much higher, then we've got a problem.
Yeah. And just releasing the reserves, that's just a little temporary Band-Aid. That doesn't solve anything. Because there's the headline about the meeting with the G7 countries. Yeah. Okay. Gut check question for you before I let you go. Let's do a two-part question. What is that one thing that's keeping you up at night that not enough people are talking about? And then maybe on a positive note, what's something that you're optimistic on or hopeful about?
I think, obviously a lot of people have been talking about the Citrini report, right? I think, it's actually very interesting because I think they got it completely wrong, by the way. I'm it's actually funny because their whole entire thesis is built on two assumptions. One, that AI is really, really, really good. And it's going to basically it's going to get everybody fired. All right. And then the second assumption that they're making is that you're going to see a massive income transfer from the workers to the AI dominant firms like, OpenAI or whatever. Anthropic, right? And then they're basically assuming that the money that's going to be accumulating, concentrating at the big AI dominant firms will not get spent or distributed. As a result, like, the economy short circuits, we're going into depression, right? That's the whole setup. My view is quite different. I'm not concerned AI being too good. I'm more concerned that AI is not good enough. I mean, to the extent that actually, I think this is the reason why outside, I'm not talking about coding, right? Obviously, Claude Code is very good. I mean, it's a game changer. I have no doubt 25% of software engineers, they're going to have problems. I mean, in terms of keeping their jobs over the next 3 years. But outside, programming, coding, it just seems to me that AI has not, we've got many generations of AI now. They have not really sort of got to a point that, that can really take over any jobs. This is the reason why corporate adoption is relatively slow. So my view is that, so I think I'm less worried than they are about AI being too good. I'm more worried about AI's not being good enough. And this is why I'm continuing to worry about the AI trades. Okay, that I don't know, if you're not even that good and the competition is heating up, how are you going to actually monetize? And that's my biggest issue. So I think from that point of view, I think what's happening, like, I'm very optimistic. I think Claude Code is game changer for the whole tech industry. In a way, it's a good thing. It's a good thing because in a way, it promotes more competition because everybody can now essentially come up with reasonable codes to compete with the big companies and so on and so forth. That's why even the likes of Microsoft are shaking in their boots because in a way, writing code is going to be so much easier. So that's a good thing. Okay. But the bad thing is that I actually think that, the whole AI trade is still riding on a false premise that it's going to be easy, that there's going to be a winner takes all type of outcome, that the winner is going to be pocketing a lot of money. Right now, I don't see anybody making any money. And this is why I also struggle to see, CapEx spending at this kind of ferocious rate being sustainable. And by the way, where it gets very interesting is that imagine, I think right now, a lot of these hyperscalers they need an excuse to pull back on their CapEx. I think they're getting a bit wary. If oil prices were to stay up here for a little longer, that might just give them the perfect excuse to say, oh, well, by the way, the economy is weakening. We're going to have to pull back a little bit on our CapEx commitment. If that happens, then we're going to have a big problem because the market will get repriced sharply lower. And I think that's where it gets interesting. That gets very, very interesting. This is why I'm saying that in a way, if we were to get a big, fall in the market or a recession or whatever, you need to start to see interaction between private credit, AI trade and the war. If they start to, interact with each other, that's when things can get potentially out of hand.
The perfect storm, if you will. David Woo, CEO of David Woo Unbound, author of the upcoming book, Merry-Go-Round Broke Down, along with Margalit Shinar. It comes out at the end of the month, so March 31st. I'm going to link for the folks who watch this show. I put a link to the book. It is a novel. It's a financial thriller. I've started reading it. Fantastic work. You have reviews from folks like Paul Tudor Jones, Howard Marks, like the who's who of the hedge fund world. Amazing. So this audience loves you and we want to support your work. So I'll make sure to link it in the show notes.
Thank you so much. And this book is important to me also because, the reason why I wrote this book as a novel as opposed to another nonfiction is because I want to make this topic, because the story is about globalization. Okay. And I think there's a lot of misunderstanding about globalization. And the reason why I wrote it as a novel is because I want to make the topic as accessible to as many people in the universe as possible. Because I think, there is a face. I decided to put a face on globalization so more people can relate. Because again, I think we're now at risk because we talk about a lot of global issues and none of this is actually good in the end, because there will be no winners. At the end of the day, everybody will be losers. And I think I wrote this book in order to help raise awareness about what's happened to globalization. I'm not saying there's only good things. There are plenty of good things, but what I want to basically make sure is that we don't throw out the baby with the bathwater. That's it.
David Woo, thank you so much for being so generous with your time, all of your knowledge, your wisdom, helping all of us learn and get better. We really appreciate any time that we get with you, and I am so grateful. And I hope everything goes well. Take care, be well, and I look forward to our next conversation. Thanks again.
Thank you, Julia, for having me.